Okay, good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time. Today is Wednesday, December 14th, 2022. Yours truly, Mickey Blindside, here with your market memo. Okay, so today is FOMC. Everybody's getting giddy. Everybody wants to gamble. It is what it is. If you do choose to gamble today, make sure you keep it small. I expect the unexpected. Okay, that's like the best thing I can tell you with FOMC days. Everybody has all these sure narratives on what they think is going to happen, but those are all stories. There's nothing wrong staying out of this. Okay, so I myself, made lotto a small amount. Maybe a small strangle like I usually do, but I never make it anything big. It's usually less than 0.2 or 0.1% of the spec account. So I keep it very small. So even if it goes to zero, whatever. I think I spend more on Vegas than I do on some of those lottos. So anyway, I want to go over. We went over this yesterday already, but I think it's worthwhile going over again. The market, the Fed funds futures market, is pricing in right now about an 80% chance of a 50 basis point hike today. Okay, and these are all recent numbers. All right, so we have a 80% chance of a 50 basis point hike, and that's in December. We do not have a January meeting. There is a February meeting, and in the February meeting, the market is pricing in the highest chance of a 25 basis point rate hike. And in March, it looks like we get another 25 basis point rate hike. For the rest of the year, it looks like we maintain that 5% until we get to around September, and that's when the market has an increased chance, well, at least it's showing an increased chance of a potential rate cut in September of 2023 of about 25 basis points, all right? And then perhaps another 25 basis point rate hike, a rate cut, or 25 basis point rate cut in December of 2023, okay? So 50 basis points today, 25 in February, another 25 in March. We maintain that 5% Fed funds rate until September, and then the Fed will start cutting rates gently, 25 basis points at a time, one in September and one in December. That's what the Fed funds futures market is pricing in. We shall see how this changes tomorrow. Usually after FOMC, within the next couple of days after that, we see these odds change. So I think that is when we'll monitor the changes. I think if the market prices in a little bit more of a 5% high, the high nominal mark for Fed funds. So let's say, I don't know, the March, May, June, let's say it gets to, the probabilities get to like 5.5 for the 5.5 zone, 5.25, 5.5 zone. We could see a little bit of a pullback on the market. All right. And speaking of a pullback on the market, yesterday, I put this on the Discord, but yesterday I noticed that there was a drop in dark exchange transactions. A lot of institutions, more of the institutional trades were on lit exchanges, and generally that usually means that rather than masking their trades, they're more eager to get out with a lit exchange. And so when we see that, generally, not all the times, generally we do see a pullback in the market whenever that happens, okay? Now, how far is that pullback going to be? I don't know, okay? It's hard to say. One thing, though, that we do rely upon is our liquidity data. One of the things that we track here at Checkmate Trading is the junk bonds advance decline line. We take a look at all the junk bond advances, all the issues that advance for the day, and all the issues that decline for the day. You subtract those two numbers. A positive number means there were more advances than declines. A negative number means there were more declining junk bond issues than advancing. And you add all those days advanced declines up, and you get a line, okay? And right now, our junk bonds advanced decline line is moving on up, okay? We're not seeing any declines in there. It does look like there is a little bit of a risk-on sentiment, at least in junk bonds. Now, I'm sure, okay, the Fed also looks at this too. All right, it's not just us that looks at this. All right, although when it comes to retail, though, not a lot of retail traders know about this. Usually, it's mostly the pros that know about this. But the Fed, I'm sure, knows about this. All right, their economists know. They see this too. So to them, this is a sign that corporate credit is still relatively cheap. And that's probably not what Jerome Powell wants. Okay, so he could have a little bit more of a hawkish tone in his speech today. That is very possible because he might want to smack this junk bonds market down a little bit just to cool it off a bit. Okay, that is very possible. I do know that the Fed economists, they do look at these junk bond metrics to see the health of corporate debt markets. Okay, this is something that they do track. So, this is something that they do not want to see. They want to kind of see it stable off a little bit. So I wouldn't be surprised if Powell gets a little bit hawkish in his tone today in the speech. Okay, so just watch out for that. But however, junk bonds advanced decline line is increasing. Now, we mentioned that there was a data divergence. Some of our other liquidity indicators, like our New York Stock Exchange high-low line, started curving down again, although it looks like it's trying to make a little bit of a recovery today. However, even right now, it looks like it is negative. So it looks like it is pointing back down again. Whenever, this is something that I've back tested and I've studied. Numbers going all the way back into the 60s and 70s. It is really hard to have a meaningful, sustained rally in the market when this is not curving up. Okay, when it's not curving up, when it's not above all these moving averages, it is very, very difficult for the equity markets to have a sustained rally. All right, so we are seeing this curving back down. All right, the New York advanced decline line. This is all the advancing issues in the New York Stock Exchange, subtracted by all the declines, and also you add them all up, it gives you a line here. This is also starting to level off. Okay, whenever the advanced decline line on the New York Stock Exchange is decreasing, generally we start seeing the small caps not doing so well. And also the market is more prone to these quick sell-offs because the market is being held up by only a few names. If this were to come down and the market still keeps rallying, generally that's what it means. Okay. So we are seeing those data divergences are. Again, junk bonds ADL line is pointed up, but all of our other liquidity indicators are starting to taper off, okay? And I do think, from a couple of days ago, I told you guys this. The reason why I think is because we were seeing over hedging happening, you don't have to call it over hedging, but the demand for hedging has been very strong in the past couple of days. We have seen some days where the S&P 500 would go up as well as the VIX itself. The VIX would be going up as well as the S&P 500. So let's just put the VIX and S&P 500 together here on the chart. SPX. So as you can see here, over the last few days, we've seen outsized moves in the VIX, even though we didn't really see that big of a sell-off in S&P 500. So the VIX didn't really collapse, even though we had a down day here on the 9th, okay? And then here on the 12th, which was 2 days ago on Monday, we saw the VIX and the S&P 500 go up. So again, hedging demand is happening. What's so different from then and now, okay? And remember, 6 months ago, we were talking about dash for cash. The market was going down and the VIX was going down at the same time because instead of hedging, institutions were selling shares and raising cash instead because TINA was no more. TINA is there is no alternative. Well, there is an alternative when interest rates are higher and when the dollar is in an uptrend. Now the dollar is in a downtrend. Interest rates have cooled off a bit. They're still kind of high. So we're seeing hedging demand coming back into the market. So we've seen a lot of puts being formed in the market. And so one of the things I wanted to go over today was the S&P 500 options expiration. And right now, if you look at the SPX options chain, and this was taken literally minutes before we started, the 4,000 strike has a lot of open interest, not only on the put side, but on the call side too. We're talking 160,000 on the put side and about 155,000 on the call side. Now, remember, folks, SPX options have a nominal value that's 10 times larger than an SPY options contract. So nominal value wise, these are 10 times larger. So it's like as if a nominal 1.6 million open interest on the put side. Okay, it's that dollar equivalent. All right. So we can see we're under some major put walls. I mean, those put walls go all the way up. I mean, we're seeing at 40.50, we have 4100, and again, delta neutral is around here. It's around this 40.50 to 4100 zone right there. So we're under delta neutral right now. There's a huge amount of puts, and again, the dollar's in a downtrend. We still have records amount of cash in those foreign dollar denominated accounts. So if we see also the euro rise and also the British pound rise and also the yen rise at the same time as the dollar drops, and VIX collapses, I mean, we could be seeing a really massive rally in the market where all those dollars and those foreign denominated accounts go into the native currencies. The native currencies, people start buying assets. Okay, that could be the case. All right, and if you're wondering how much foreign assets buys our stocks, it's a lot. Okay, I think it's like something like 1/3 of all the S&P 500 trades are done in euro denominated accounts. It's like something like that. So there is, foreign markets do participate actually in a pretty large scale in our market. So again, we are pretty hedged, okay? And so I'm not trying to gamble on what Jerome Powell says. Gambling on what a central bank figure says or does usually is a fool's game. But don't be surprised if even though you hear certain words, and I saw it on Twitter, people were like, oh, look out for these words. Even if he says those words, we may not see that response just because of the already existing market positioning. I'm not trying to predict the future. I'm just anticipating what could happen, okay? All of these things are within the realm of possibilities. The important thing, the message here is just manage your risk and just stay open-minded and stay nimble in your trading. Just because it may not, the reaction that you think is going to happen may not happen just because of the overall positioning in the market that already exists, okay? We are overhedged for this. The only way that we're going down by a significant amount in this market before options expiration this coming Friday is the VIX really needs to soar. I'm talking like the VIX needs to go 24, 25, 26 in order to sustain all of those puts getting cashed, okay? You need more puts. You need more put buying to enter the market, or you're going to have to see huge block orders, sell orders happening in S&P 500 stocks in order to see that. Generally, though, usually that kind of large institutional like cashing out of shares is very rare. Institutions rarely make that kind of knee-jerk reaction. They will do that, though, on contract hedging using options, though. So I think if we do sell off, it's going to show in the VIX, okay? So keep an eye on that VIX if you guys are long. If you see that VIX really spike up and sustain 24, 25, it's time to start managing some risk, okay? So I just wanted to share that with you guys. As far as as we're concerned, if I still have those hedges, I still have those dollar longs, those UUP, just in case, guys. I don't hide anything from you guys. I'm still in it. I always alert you guys whenever I do stuff. We're a little bit underwater on this. I'm still in those XOP, the XOP put spreads for this coming January. We're right around break even. The market rallied a little bit. Oh, look at that. It's down. Oh, so we're in the profit now. Are we in the profit again? Yes, we are. Yes, we are. Okay, so, you can go and look at yesterday's video on why I chose XOP as my short. We've just been seeing a lot of tax selling in this market where the biggest losers and the biggest winners are getting sold in block pairs. Okay, we saw this last week. If you go through our last week's video, I go over that tax selling phenomena and I went over all those block trades. So I think that continues, especially if Jerome Powell gets hawkish. If Jerome Powell gets hawkish, that will raise the 10-year Treasury rate. Okay, if the 10-year Treasury rate goes up, that means the 10-year Treasury bond price goes down. The 10-year Treasury bond is the collateral of choice in the world market. Okay, in world markets, if you need a collateral, the highest quality collateral is the 10-year Treasury bond. If the price of the 10-year Treasury bond goes down, collateral value goes down, the need to raise cash goes up within institutions, which means they're probably going to do a lot more tax selling. Well, guess what's one of the biggest winners? XOP. XOP has been a great winner this year, and I think if this tax selling intensifies into the end of the year, we could really see this really fall off a cliff. Okay, and I'm talking like potentially it could get into like the 115 zone. All right, that 116, 115 zone, that would put my spread at full profit. Okay, or beyond full profit, actually. So, but I have a vertical spread, so my profits are capped. But that would be 3-to-1 reward to risk payout. That would be, that would be a great Christmas gift for me. But again, I'm going to keep an open mind. I have my risk management levels, and again, that risk management level is this outside day down. The highs of that day. The high of that day was 139.46. If we close even just one day over 139.46, I am out of my spread. I'll probably take like a 5 to 10% haircut. I'll be out of my spread. Okay, so risk management. What I'm looking at, the thesis. XOP, I'm still in it, okay? We'll see what happens with that. Since we're talking about XOP, let's talk about crude oil. Crude oil is going up. We've been seeing gasoline futures go up, and whenever gasoline futures go up, the crack spread goes up, and they're pretty intertwined right now. I do think at some point, I think this is just a short covering a rally. If this makes a lower high and it curves back down again, the crack spread is going to narrow again. We're probably going to see some more selling in crude oil because of that. One of the levels that I'm looking at to get long on crude oil is where the oil to gold ratio gets to around this zone, around the support zone, 0.037 to 0.035. Around this 0.037, 0.035, that's around $60 to $63 per barrel on oil. Okay, so when it gets to around 60, 63, I may decide to go a little long, a small long position, perhaps a spread on oil futures. At the same time, I may buy some energy names too. There's a few energy names I've wanted to buy. Actually, I wanted to go over that a little bit later when the time comes, but I guess I'll go over it now. But one of the names I'm looking at is CPG. This is more of a smaller company. This is, I would say, a little bit more risky. A little bit more speculative. However, their free cash flow growth is increasing. They are in a positive. It's not like this is not some zombie company. They are making a positive free cash flow. It is increasing. They're actually increasing their share buyback as well as their dividends. So they are returning a lot more capital to the shareholder. It's a great name, but it is a smaller name. And also about half of their revenue comes from natural gas. And you know how I feel about natural gas. I've been saying this for weeks. I think for long term, we're talking like 3-5 years out. I think natural gas, definitely the margins are going to be better. I'm very bullish on the natural gas industry for the next 3 to 5 years at the very least. So half of their revenue comes from natural gas. The other name that I'm looking at is also Antero. Antero also is a big, and they're also in natural gas as well too. I think this is a bigger name, a little bit more financially stable, a bigger market cap. For this, I'll probably enter with some leaps, and their leap market is actually not that bad. You got weeklies, and we got these 765 days to expiration, January 2025 options, and the spreads are really not that bad. I think the first 30 minutes and last 30 minutes of the day, the spreads kind of widen, but in the middle of the day is actually quite decent. So I may go in with some, delta 65 to 80 in the money calls and sell some poor man's covered calls on a weekly basis on this. That's, to me, that sounds like a great play. And I think closer, maybe with Antero, I'm willing to go. Maybe let's look at end of December, maybe early January. I may consider taking this trade if we see a little bit of a pullback in natural gas as well too. And if we want to take a look at natural gas right now, everybody's saying that this is the time to trade natural gas. I don't think so. I think this is just going to go up and down based on weather reports. So if you guys want to predict the weather, I guess you can play this. Predicting the weather or something random like that is not my cup of tea. So I will not be doing that. I know some of you guys went into Boyle. You guys are probably still in profit if you entered early. If you chased at the end, you're waking up to a rude awakening today. That is not something that you want to be facing early in the morning. But it is what it is, and that's why we wait for levels. That's why patience is so important. Yeah, I do miss out on some trades, but I don't see these kind of drawdowns. And I think really if you think about trading, it's not a sprint, it's a marathon. And if you want to really do well in this business on a multi-decade time frame, you really have to protect your capital, and you have to keep your drawdowns really small. Okay, that's the name of the game, really. All right, keep your winners big and keep your losers small. That's what keeps you in this business for many decades. But anyway, I do think that if natural gas does come down, maybe let's say fill this gap. I'm not a gap fill kind of person, but I do like the level. It was a support here in the month of November. So I'm willing to maybe go long on Boyle if we get to right here around, we dip under that 6, okay? If we get to like 5.9 or so, you may think that that's a big move, but take a look back all year at natural gas. We've had days where this thing goes up or down like 10, 12%. I think yesterday was a 10% day, was it not? Yeah, it was. It was almost a 10% day. So, that it could easily do that in a day. I don't think it's going to do that in a day, but I don't know. Let's say 2 weeks later, we get a little warm spell here in the United States. That could definitely send this down. So, and if it's finds support at around that 5.9 or so, I may go along with Antero as well as Boyle. Boyle will be more of a short-term swing trade, and Antero will be something that I probably play out for multi-quarters and sell poor man's covered calls on, like I said, by using those in-the-money leaps. Okay? So that's that. One of the other things I noticed too was in the corn markets. Corn markets were seeing a little bit of a weakness, or not weakness. I shouldn't say weakness, but it's a little bit of a pullback here. I did look at some corn reports. It is looking like that there are estimates for a lower corn crop next year, not just domestically, but also over the internationally as well too. Ukraine is a big corn producer. They are estimating that they will not be able to plant as much corn as in years past, obviously because the conflicts that they're going through. So it looks like they're going to have decreased production next year. Not only that, India is also curbing their exports of corn. Right, India uses a lot of their corn as chicken feed, and right now, because of the price of chicken increasing, and also their own corn supplies dwindling, they're trying to keep more of that corn crop within their own domestic markets to feed all those chickens. So we might see the price of corn go up. I don't think the timing is now, but I think as we get closer to planting season, I think a corn long, and especially if corn gets down back into like the 500s or low 600s, I think that would pose a very interesting long trade on corn, okay? And so I'm going to be monitoring that. So hopefully, when we get to around planting season, and maybe Q1 of this year, we can, if it bottoms out around this like 580, 600 zone, I think that would be a very interesting long position to take. And I'll fill you guys in. This is something that I'm looking at, planning weeks, months ahead, and generally I find that trades that we do that tend to be the better trades. So this is something that I'm looking at, long corn, if by planting season we're bottoming out on this 580, 600 zone. And again, I'll let you guys know, as I always do, via the Discord, okay? So that's that. Oh, today I also wanted to go over some of our tanker names. Today, Scorpio Tankers, which is on our watch list, came out with earnings today. Actually, I'm just curious on what other ones are doing. FLNG coming down. Okay, getting closer to our buy zone. MADX. Now that I'm out, now it wants to go up. It was a mistake to get even involved in this to begin with. Anyway, that's MADX. What is it? And then our names that we're in, FRO, or the ones that we want to get into. FRO, they got an upgrade recently. And then STNG. Oh, wow. Look at that. STNG. So they had earnings today. They had great earnings today. And the reason why I want to go over Scorpio Tankers earnings is because they are very detailed in their earnings report about what their average daily charter rates are, and they actually break it down, and they also break it down like their average for the year and their pool and spot market versus what they locked in after a certain time period. So let me actually pull that up. So Scorpio right here, this is the average pool and spot market right now, and this is the part of the thesis, guys. Okay, so I know some of you guys were like, some of you via DM sent me all these like public research these research publications showing like the average rates, these dry cargo route rates that were falling, and I said, those are just individual route rates. What I'm looking for are the niche markets where they still have pricing power. And that is the reason why in the original thesis, when I originally went over the tanker thesis, that I want to be in oil and natural gas tankers. I know. Last week I got the FOMO. I got into MATX, which is more of a dry cargo container. And, before yesterday's CPI report, I got out. We took a 5% haircut because of it. It is what it is. It was only 0.5% of my spec account, whatever. So I FOMO'd that. But the original thesis was for oil and gas tankers. And I said oil and gas tankers, they're still going to be able to command a high premium, and especially for certain ships. And the ships that I mentioned were, the more medium to long cargo ships, and those are the ones that FLNG, STNG, FRO, that's their fleet. Their fleet contains those types of ships. It's mostly those ships. So that's why I really wanted to focus on those names, okay? Actually, I found a couple of other ones, and maybe we'll take a look at that after this. But if you can see, look, this is the spot rate. Okay, this is the spot rate right now for an LR2 MR. So these are like mid-range, long-range, handy max. Those are the really big ships. So these are right now the spot market rates. Okay, now this is the average charter rate that Scorpio got into as of December 1st, 2022. As of December 1st, 2022, so in the last 14 days, this is what they were charging on average for the day, okay? As you can see, there is a really, really big premium for certain companies like STNG, like Scorpio, like the FLNGs, like the FROs, okay? So this is still part of our thesis, and that is why, guys, I keep telling you guys, when it comes to names like tankers, you really got to look at the earnings report. You really got to look at their margins and see what their charter rates are. And as you can see, there are certain companies that can command a premium, okay? Some of your, Pacific-bound dry cargo routes, yeah, there's so many ships out there. They don't have as much of a shortage, and yeah, it's not going to be they're not going to have the power to command those types of rates. They won't have that leverage, but companies like Scorpio, companies like FLNG, companies like the FRO, they do. Okay, and so it's just confirming our thesis here. This is actually good news for us, because that means the companies that we're tracking, they're going to see increased pricing power. And again, what I told you guys was this too. There is a shortage of these tankers. All right, there is a shortage of these types of tankers right now, and there's new orders actually going in. And if you actually take a look at some of the reports out there, there's actually a premium now to get started on a new order for a new tanker to get built. If you order one right now, they're not coming out until 2026, 2027. Okay, so this is a 3 to 4 year phenomena where some of these companies are going to make increased revenue. All right, right now, some of these companies are trading at really low multiples. I'm talking dirt cheap like multiples right now. Okay, and so this is going to be, I think, once the market realizes this, I think they have already started recognizing this, but I think some of these tanker names are not widely institutionally owned. But once the institutions run out of places to hide their money, they're gonna come here. I'm pretty sure they're gonna come here, because again, the some of the dividends that they're paying, some of the share buybacks that are doing, some of the capital returns to shareholders that these companies are going to do is mind blowing. I mean, some of these margins are just ridiculous. This is a huge margin over the spot rate. Okay, even at spot, they were making good money. Imagine getting 30, 40 over spot. That's just a great business to be in right now. So again, it just reinforces the thesis that we've been talking about since before Thanksgiving. So we've been really patient on this, and it's been kind of running away from us. But hopefully, I don't know, maybe we see a pullback. I don't know. A lot of people in our Discord think that we're going to see a sell-off soon because of Powell, and I hope they're right. To me, I mean, we'll always have a plan, regardless of what the market does. That's just me. But I would, some of these people making these wild predictions, I'd really love to see that, because I have a lot of names that I really want to buy. And STNG is one of them. Again, STNG is on our watch list. FRO is in the watch list, and FLNG is in the watch list. FLNG is my favorite one, just because they have the newest ships. Their ships are like an average of 3 years of age or less, and also they got these new very eco-friendly tankers, which gives them good points on that ESG front. So I do think that if this gets to around that 33.50, 33.75 zone, that's a very good buy. Just know, there's a chance, just from what I see on the weekly chart, okay, there's a chance that this may go up to like 28.5, okay, 28.5. So even if we do get into this 33.50, 33.50-75 zone, I do want to see like a bottoming signal before getting in, because there's a chance that we get to like the 28.5, okay? But 28.5, I mean, I'd be buying with both fists at that point. But yeah, 33 and a half is my initial buy zone. And, if we get to 28 and a half, if the market is generous enough to do that, we'll get in there. Okay. I don't think so, though. I don't think it's going to get that low. Again, the multiples are so low. The dividends are so high. I mean, look, just in the last 4 years, look at the dividends they paid. They paid what? What is 75 times? 75 times 4 is $3, and this was another 50 cents over with this was especially high dividend. So that's $3.50 on a $35 stock. That's about a 10% dividend. So in the last 12 months, this company paid 10% of its current stock price in dividends. I mean, and they have increasing cash flow. They have increasing free cash flow. I mean, this is a great story to be in. The fundamentals are there. The macro is there for this. Okay. So again, that's my thesis on this. Crypto. Let's talk about crypto real quick. We are seeing increased open interest. We're still at around 5.3 billion as of yesterday. So yesterday we went from like 4 point something to 5.3 billion. Now we're at around 5.3 billion still, at least the last time I checked. Let's see if it changed at all. Oh, 5.36. Okay, so just a little bit more. We are seeing increased volumes, especially in the end of month December contracts. There's a lot of OI, open interest, on the December contracts as well as the March 2023 contracts. Yesterday we had a forward skew on the December 15th. Remember, right before I updated this, you saw that forward skew. That was actually a few hours ago. So a few hours ago we had forward skew. It looks like we have backward skew again, or at least it's going back to more of a backward skew. What is going on? Did it drop or something? No, it just must be people trading, or it could be because the liquidity was so low that the pricing just happened to be that way. But we're actually seeing block trades coming back into the market. Okay, March, June, March, June. Okay, so we're seeing bigger block trades. We saw this right before the merge, maybe a couple of months before the merge in September. We saw these big block trades increasingly come into the Ethereum options market. We saw the open interest go from about $4.5 billion all the way up to like $7.5-8 billion. Okay, and then right after the merge, guess what happened? Everybody cashed out, and then all that open interest went away, and then we had the whole FTX fiasco, and that just burned all those speculators as well too. So now new speculators, new fish are coming into the market. Let's see what happens. I know one of our crypto experts here, MSC, he was talking about that they're going to be there's a new release scheduled for, I believe it was for March, and it's for the ability to withdraw staked ETH. And I'm guessing that the upgrade's going to happen around sometime in March. Maybe that's a catalyst for all the speculators to run back in and try to speculate on on the Ethereum markets. We might see that happening again here. That might drive price up a little bit. But once, the options market is a lot more useful, the bigger it is. So once we see more participation, what I want to see is at least $6.5 billion in open interest. Then we can start analyzing the options market more and seeing what we can gather about anticipating price moves in Ethereum. But until then, we'll be patient. But again, my plans for Ethereum really haven't changed. I'm still waiting for that buy zone, although it looks like we're running away from it. I think Ethereum is up for the day, right? For the last few days. But we'll see. I mean, who knows, right? After FOMC, you never know, okay? With the, people may get spooked out about what Powell says. I think that'd be pretty stupid. But, there's that saying, the markets can stay irrational longer than you and I can stay solvent. So, it is what it is there, okay? All right. Are there any questions? Comments, rude remarks? Oh, wait a minute. I'm getting messages. What is this? Our live feed on YouTube got cut. This week I'm actually, out of town. I'm actually doing this all on a laptop. at a hotel in Vegas. So, that may be the reason why we got cut there for a second. But rest assured, I do have a recording that is being recorded onto my hard drive right now, and so I'll post the recording so that you have a seamless video. Okay, sorry about that. That's only for this week. Next week it's business back to usual. I'll be back home next week. Anything else you guys want to look at? Going once, going twice. Yeah, what's going on? Yes, hey, yes, I can hear you. What's going on?
I'm wondering if you're going to start covering real estate soon since you guys opened that thread in Discord.
Real estate, yeah, we'll cover real estate. You mean more like covering individual properties, or like real estate, the ETF?
Anything you think is valuable.
Okay, sure. Yeah, we'll start covering real estate. I'll try to put some things together for real estate. Maybe we can start looking at delinquencies. That's something that I've been tracking, is these delinquencies on mortgages. So for the next not tomorrow's market memo, because tomorrow we'll be going over like more of the what happened during the Fed meeting. But next week I'll prepare some stuff on delinquencies. Maybe we'll start. Maybe I can gather some information on some real estate trends. I've got a few friends in the real estate market. Maybe I can ask them to see if we can get some like local trends in some of the big cities. I know if we talk about local real estate, I don't know if you guys want to talk about certain regions. I know a lot of people here are in the East Coast or in the West Coast, so maybe we could talk about some of the major hubs around there. I know a lot of people have interest also in the American South. Maybe some of our friends overseas can share with us some real estate data in their own markets overseas. Maybe we can also talk about that too. So yeah, I'll try to prepare some stuff for next week for a real estate discussion. Anything else you guys want to look at? Any comments, questions, rude remarks? All right then. Well, in that case, we'll call that a day. So thanks for joining. That wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right. Today's FOMC. I'll be back tomorrow, 10 a.m. Eastern time, 30 minutes after the opening bell of the New York Stock Exchange. Trade safe, guys. Manage that risk. Be open-minded. All will be good. Take a deep breath. All right. We'll get through it together. See you guys tomorrow. Trade safe.